Gold is money, everything else is credit. A quote by J.P. Morgan. Gold has been a safe haven asset for centuries and has been used as a form of currency, a store of wealth, and as an investment. In times of economic turmoil, gold often increases in value. Gold is a popular investment because it is seen as a hedge against inflation. Inflation is a general increase in prices and a decrease in the purchasing power of money. When inflation occurs, the value of your savings can erode. Gold, on the other hand, has historically held its value during periods of inflation. This is because gold is not subject to government policies or economic conditions. Its value is determined by supply and demand, which makes it a more reliable store of value. For example, between January 1970 and February 1980, when UK inflation was at its highest ever rate, gold priced in pound sterlings went from £14.50 to over £300 per ounce, a 1,968.97% increase over a 10-year period. Gold has outperformed bank interest rates. In 2023, Britain started to increase its interest rates from the historic lows of mid-2009 to mid-2022, which included a record low rate of 0.1% in the period between March 2020 and December 2021. Since 1999, gold has averaged an annual growth rate of 11.73% per year, outpacing inflation and bank interest rates by some margin. Gold is considered a safe haven asset because it has historically held its value during times of economic turmoil. A safe haven asset is an investment that tends to hold its value or even increase in value during times of market volatility. This is because safe haven assets are seen as being less risky than other assets, such as stocks or bonds. Gold is not subject to government policies. The value of gold is not affected by interest rates, monetary policy, or other government interventions. Gold is a global asset. It is traded and priced in all major currencies, which makes it a more liquid asset than other commodities. In fact, experts, including the World Gold Council, suggest putting around 2 to 10% of your portfolio into a safe haven investment such as gold. There are a few reasons why gold is considered a safe haven asset. First, gold is a physical asset that cannot be easily manipulated by governments or central banks. This makes it a more reliable store of value than other assets, such as fiat currencies. Second, gold is a scarce resource, which means that its supply cannot be easily increased. This makes it a more valuable asset in terms of economic uncertainty, when demand for safe haven assets tends to increase. Did you know, according to the World Gold Council, an estimated 208,874 tons have been mined since humans started using this precious resource. The World Gold Council also estimates that even with modern mining technology, 2,500 to 3,000 tons can be mined per year. Size-wise, all of the gold ever mined would only be 56 foot squared. The annual gold production would only be 14 foot squared. If each Chinese citizen was to buy just 1 ounce of gold, it would take up the annual supply for the next 200 years. BSC Collectibles specializes in modern British gold coins because in the UK, these gold coins are a wholly tax-free purchase. They are VAT and CGT free, which means that you do not have to pay any value-added tax on purchase or capital gains tax on the profit you make when you sell them. This makes them more appealing than other forms of gold, such as gold bars or ETFs. Gold coins are a great way to diversify your portfolio, hedge against inflation, and protect your wealth. They are easy to store and transport, more liquid than gold bars, and exempt from VAT and CGT in the UK. If you're thinking about buying gold coins or you have any questions, you should call BSC Collectibles today on 0800 107 5135.